Yo, what is going on, everybody? Welcome back to another Kev Capital chart of the day video where we spend some time pulling back the curtain on some of the most important charts in the market and what it means for you. Before we jump into the video today, if you enjoy the content, please like, subscribe, and leave a comment below. Also, do not forget to check the links in the description below where you can visit patreon.com/Kev Capital and analyze, trade, and invest the markets with me on a daily basis. We are currently running a 50% off promo for all new members for the first month. With that being said, let's jump right into it. Today, I want to provide an update to our S&P 500 chart. In my last video, and videos before that, let's just talk about where we've come from, right? Since Q4 and early this year, I've been talking about how there was going to be a major correctional phase in the S&P 500. That did play out. I said that we would come down to the 6,300 to 6K level. We came down to 6,351, so we barely missed my overall range. But overall, 6,351 is pretty close, right? Not too bad. I did state that we would get a counter trend rally after that major drawdown. You're currently seeing that, right? So just real simple, right? I don't want to get into too much detail, right? We called the correctional phase on the S&P way ahead of time. Did a really good job there. Got positioned into plays that actually performed during this major correctional phase. Energy plays, materials plays, consumer staples plays at the beginning of the year, stayed away from high-flying tech, which obviously led the correction. That ended up panning out really, really well. Actually even caught a nice 50 to 60% trade on oil, which was awesome. That correctional phase has played out to the downside. Didn't quite hit the 10% on here, but the NASDAQ and the Russell and the Dow actually did hit that 10% level. Didn't stay down there very, very long, but nonetheless, we did 9.79%. Really, really close. So really, really great work, right? So pat ourselves on the back here, pat myself on the back. Did a really good job at tracking this so far. Now things get interesting, though, right? Now things get interesting because I said there was going to be a counter trend rally. It was my opinion, right? And it was my base case that it would end up being a lower high, followed by a move down to the more depths of that 6,300 to 6K level. So right now it's testing my theory that, maybe or maybe not that's going to happen. And why is this happening, right? Obviously a huge green candle, and on the NASDAQ, massive green candle up 3.5% here in the pre-market. It's because of the ceasefire that occurred last night, right? There was all these tweets coming out about, everyone's friends now. We're going to help each other rebuild, and just all this, insane talk, really. It's kind of, how do you go from such high level of escalation to now being best of friends? We're going to rebuild Iran. We're all going to be friends in the end. I don't buy it yet. I really don't. I would love to buy it. I would love that to happen. You know what I mean? But at the end of the day, got to be taking all of that with a grain of salt here. Basically, what there is now is there's a ceasefire for the next 10 days. They're going to try and work out a deal to end the war. There's a 10-point plan that Iran put out that seems to be very demanding. I don't know if we're going to be able to meet those demands, but whatever. This is why we're getting the move that we're getting right now, okay? So this is a very news-driven market at the moment. The market is, this is a pre-market move, very low volume, very algo-driven. But once again, right, it's testing my base case, and that is that we would get rejected somewhere in here, somewhere at these key moving averages, roll back over and go down to that 6,300 to 6K level. If that doesn't happen, I also laid this out on the Friday video. I said, if that doesn't happen and my base case is incorrect, then we're going to finally go up to the range that I've had mapped out since Q4 last year, the 71.72 to 73.22 zone. That would be the 618, the 1.618, and the 1.703. As you know, based off previous videos, that range, and even slightly above it, has called the last two major tops in the market. That being in 2025, before we had a 20+% drawdown, and then also in 2022, okay, before we had the big bear market. We even overshot it a little bit and got close to the 1.866, so I'll leave that up there too. It seems like we kind of overshoot that level and kind of mingle around in the middle before rolling over. So that's why I have basically the 7,100 to 7,300 to 7,600 zone mapped out as the original targets back in Q4 that I felt the S&P would hit. We didn't quite make it there. They ended up getting that major correctional phase. But again, it can still happen, right? So this is what I'm basically seeing now. We have this trend line coming down, which is the lower high structure. We have this parallel channel, which is also major resistance, which could also result in a lower high. We still haven't, right? We're in the middle of the week. We haven't officially broken back above everything yet. We are piercing above it on news. However, you need to see follow through above these key moving averages. If you can get follow through above these key moving averages, if you can break the 6,800 to 69.53 level, right? If we break above that trend line, that channel, these moving averages, you're almost guaranteed that you're going to make a new all-time high. It becomes very, very almost guaranteed that you're going to hit that 7,100 to 7,300 level in the short term, right? Within like weeks, okay? So that's what I'm looking at now. That's what I'm looking for. Do we get rejected here, or do we come up to the 7,100 and 7,300? I don't really know, but I know my base case is that, I'm going to stick with that we're going to make a lower high here. If we don't do that, then fine. You know what I mean? We go up a few more percent. We go up to the biggest resistance of them all, right? This was the original target. This is the big zone. So that's the short term. That's what I'm looking at in the short term. That's what I'm very highly interested in watching is, can we get the juice to push back up here and make that new all-time high? Get everyone back in, get the euphoria running, get the news headlines. But as we start to hit the biggest resistance of them all, right? That would all be occurring while we're hitting the biggest resistance zone of them all. Obviously, we know, just like I said before, has called the last two major tops on the market. Both of these were in times of euphoria. So that would be kind of coincidental. So that's just something that I'm going to keep an eye on here. Do I know exactly what's going to happen in the short term? No. I'm giving you my opinion on what I think is going to happen, but I could be wrong. We'll see. All I know is that this is still a range up here that very, very hard to buy with new money in this market, right? There's obviously plays out there. We've been allocating into some plays. We bought some SoFi in the Patreon. That's up 10%. We bought UNH the other day in the Patreon. That's up 10 or 11%, right? We've been allocating in slowly into some of these plays that have been beat down, fintech plays that were beat down, software names that have a strong AI narrative that have been beat down. So not totally against buying anything in the market. It's just from there, it's like, where do you look, right? We ran up consumer staples. We ran up the energy plays. We ran up the oil trade. We ran up some of the materials plays. Then you start to kind of search around and say, all right, well, what's buyable, right? Let's look at the Googles. Let's look at the NVIDIAs. Let's look at some of these tech plays. Let's look at some of the big banks. Let's look at financials, right? Let's look at, all these different sectors, and they look unbuyable, right? They still are not attractive. Now, I get it. Some of their PEG ratios, their fundamentals look strong, forward multiples. That can change on one earnings, okay? So you don't want to just be a pure fundamentals trader unless you're just long-term investing. If you're looking for new entries into the market, this is a very difficult spot to be buying, okay? There's always opportunities out there, and we take advantage of those opportunities because we do a great job at searching sector through sector, company through company, looking at fundamentals, looking at technicals, and then finding and then obviously portfolio management, proper allocation sizing, given the fact that we are where we are in this market. And that's a testament to the work that I do in the Patreon every day with our group. But at the end of the day, man, let's just be honest here, right? There's no bias. This is a tough market to buy. With new money, right? Allocating heavily, 20, 30% of a cash portfolio into this market right now, very, very difficult to do. And I just want to show you on the monthly time frame, because that's what we always go over in our videos is the monthly time frame, just to kind of rehash like, hey, this is why the market is extremely hard to buy right now. So that's what we're going to do real quick. Let's just remove all of this for a second and just look at it for what it is. Let's turn these moving averages off for a second. Also, I don't know why I can't turn this off, but there we go. Okay, I had to update the indicator. But yeah, this is where you basically are, okay? On the monthly time frame, right, we've had a major, major run-up over the last 4 years. We had that big correction in 2025 due to the tariffs, but really this has been your bull market, right? This has been the last 4 years, okay? So again, when it comes to allocating new money into this market, look where you're buying, right? You're buying up here, not here, not here, and you're not here. You're buying 4 years after a full-fledged bull run, okay? So again, and you're also buying with new money up into this golden pocket 703 and 1.886 zone, which has also called two major tops, right? So again, what makes that also, kind of difficult? Well, let's look at our indicators, right? Again, we talk about this in every video, lower highs on your momentum waves. Lower highs on the momentum waves ever since 2024. money flow is starting to decrease. Okay, so you're getting lower highs on your momentum wave while you're getting higher highs in price action. You're creating bearish divergences on momentum, on money flow. Okay, so that's one indicator that we always look at that says, okay, the market is in a kind of sketchy spot. Also on the whale money flow, you have lower highs, right? You have high number one back in December of 2024. You have another high back in October of 2025, another lower high back in January. And now we're coming back up again because you're getting a nice bounce. But again, whales have been exiting the market. Whales have been taking profits on this market. It's undeniable. The indicator tracks whale money flows. So again, lower highs in whale money flow while retail continues to push price up and create divergences to the downside. So again, that's something we need to watch very closely. LMACD momentum waves on the monthly time frame. Look at this. Back in December 2021, you peaked on momentum, had our bear market, made a lower high in January 2025 while the price action made much higher highs. And now we've made another lower high here in December of 2025. Okay, so again, it's just lower high after lower high while price action makes higher high. That's on momentum. That's on money flow indicators, okay? Net money flow, whale money flow, various momentum indicators, right? You do have that bearish cross currently. You also, if you go to the 2-week time frame, you can see that you have even a more durable cross to the downside. You're getting that bounce up now, but again, momentum is still to the downside, okay? So again, it's from a buying with new money standpoint, from allocating heavily into the market, very hard to do when indicators look that way. Also, monthly stock RSI momentum, very strong to the downside. Very strong to the downside at the moment. Typically, when this moving averages cross the 80 level and they have expanding momentum to the downside, this usually plays out and resets itself, okay? So what did we just go over? Again, right, we went over net money flow, whale money flow, various momentum indicators, okay, momentum wave indicators. All of them point to the idea that, sure, is it possible that we still come up and tap this zone? Absolutely. We've done that in the last 2 previous highs, okay? We never tapped it yet, and we've been open to the idea that this can still happen, right? So that's what I'm going to be watching for is, can we, on the back of this news, maybe some positive earnings coming up, can we come up into this zone? I do think we can absolutely come up into that zone. But again, just from a risk management perspective, right, it becomes very, very difficult to allocate heavily into a market that is up in these ranges. We still need, if you're new money and you're looking to allocate into the market now, sure, again, are there certain sectors, companies within certain sectors that are attractive? Absolutely. There's some really quality software names out there that have been crushed. These are some of the best companies in the world. Fintech companies, SoFi, Robinhood, right? Some of them have just been getting beat down. Some consumer discretionary names are starting to look very attractive, right? C Limited is looking pretty good, well below its 200-week moving average. These are just things that I talk about on a day-by-day basis with our members. But again, overall, from a broader market perspective, very, very hard to allocate heavy new money into this market. Even when you start going granular down into individual companies, sector by sector. CAPE ratios are at all-time highs, levels where we've seen major corrective periods, bear markets begin at. Forward multiples on the S&P are at high, the same levels they were at in January 2025, the same level they were at in January 2022. Right? It's not just the technicals that look the way they look. There's also fundamentals to back that up. You see whales are exiting the market, right? Whale money flow is lower. So you obviously have smart money, not exiting the market completely, but taking a lot of profits off the table. So that's just basically my base case. That's how I feel about it. I still think that it's very possible we come up to 71, 73, maybe somewhere in between 73 and 7,600 on the tailwinds of the war ending, positive outcome coming there, which we all want. We want that to happen, right? We don't want this to continue to go on. We want oil prices to come down. We want inflation to, stabilize. We want the Fed to get back on the trajectory of cutting rates. But all in all, just from a technical perspective, from a fundamental perspective, it still says, right, regardless of where we are now in this bounce, you still have a lot of battles to get through, okay? There's a big battle to get through here, and that is, making a new high first and foremost, right? Not making a lower high here. And also, getting above that 73, 7,100, this big resistance zone, which is the all-be-all resistance zone, okay? We never even tapped that. So I just have a feeling that if we go up there, people are just going to think, wow, we made a new all-time high. Things are amazing. But in reality, you're actually hitting the final boss of resistance. So that'll just be another thing to watch for. And that's what I'm going to be watching for. So just to recap what we went over the daily time frame. We went over what I'm looking for in terms of the lower high, or maybe we break out and make a new high. And then we also went over the monthly time frame indicators, went over some 2-week time frame indicators, went over some fundamentals, went over this resistance zone on the higher time frames, and basically just talked about, yes, there are opportunities within certain sectors, within certain companies, but overall the market is just really, really tough to buy with heavy amounts of capital, given that 4-year bull run, entering into this major resistance zone, and then obviously we've already had a deep correction. We haven't even made a new high yet. So again, just be careful, folks. That's all I'm saying. Just be careful, okay? If you're an S&P and chill type of person, by all means, keep doing what you're doing. We all do that at the end of the day with our retirement portfolios. But if you have an individual brokerage account, you have cash, you're looking to allocate heavily, it's tough. It's a tough time to do that, right? You're looking for something deeper, right? Something down into this zone, maybe even a little further than that, to start really feeling good about allocating heavily. Just be careful allocating heavily up in here. I wouldn't really recommend it. That doesn't mean there's not opportunities out there, though. So with that being said, I hope you guys enjoyed the video. If you did, like, comment, subscribe, and also, again, don't forget to check the links in the description below. I hope you guys all have a nice day. Peace out.